Let's get in the managements going on the show and start off with Eicher Motors. Mind you, fairly decent set of numbers, the dispatch numbers that came in for August. Siddharth Lal, MD of the company, joins in to speak about that. And of course, lots more as well. Mr. Lal, good having you. Thanks so much for taking the time out. Now, I'll be the first one to admit that I have a couple of half-baked information pieces. We are speaking to a few dealers to map how the August sales have been. And one of the dealers that we spoke to, who's also an Eicher dealer in Bombay, spoke about they seeing a 40 to 50% uptick in Eicher sales or Eicher dispatches for the month of August in certain pockets. My question to you is, have you noticed such excitement for Eicher vehicle dispatches across the country? Because your August numbers were good. They were albeit muted, but very good compared to what the rest of the industry did.
Yeah, overall we've had we continue to have a good run from the perspective that we're beating the industry because we're entering new segments, entering new markets. We're able to, let's say, we're able to actually gain share, and that's really, at the end of it, that's what's happening, because our commercial vehicle volumes grew by around 7.5–8% last month versus an industry which dropped by around the same amount. So delta is around 14% improvement over the industry, and we're gaining market share. The thing is that in our heavy duty, which is where we're entering and where we're making the big waves, as it were, we have very particular markets where we're getting very strong at. So we don't have a sort of broad approach where we're, targeting everything. We're targeting very focused markets. So if you're understanding from a particular market that there's a huge uptake, that's because we've done a lot of activity, we've done a lot of work in order to increase that market. So that's really what's going on in our entire commercial vehicle play right now.
Siddharth, have you been experiencing some pricing pressure in the heavy commercial vehicle space due to competition and that resulting in really high discounts to push sales further?
Yeah, at Eicher and VECV, our philosophy has been in price realization. So we've actually been champions in improving price realization in the market, cutting on discounts and all of that. But what's happened, of course, of late is that with numbers falling, especially in the heavy duty market, as you said, there is a competitive pricing pressure which is getting difficult. There are more discounts in the market from everybody, and we're also matching to some extent. So there is a pricing pressure, there is a high level of discounts, but that's probably a bit more temporary because of the situation that we're in right now, where the industry is sort of dropping a little bit. I don't see it as a long-term trend really at this point.
So how do you forecast, and I'm not asking for a ballpark estimate, I'm not going to hold you down to your word 3 months down the line when we talk again on the forum, but how do you see the next 3 months to the next 6 months shaping up for Eicher? Do you believe that the activities that you spoke about in your opening remark could actually result in maybe even double-digit growth in your dispatches sometime during the next 3 or 4 months?
Well, from a commercial vehicle point of view, it's impossible to say. I mean, it's all speculation right now. We just keep our ear very close to the ground as far as these things are concerned. If we see an uptick, we increase production immediately. We have a capability of doing that. If we see a downturn, we sharply cut our production. So we just want to stay very close to the ground. Now, our philosophy and the way that we're trying to, get this thing, or let's say work in the commercial vehicle market, is to continue to beat the market. So if the market is growing, let's say by minus something, and we sort of keep up, we're at 0% growth also, it's probably, that's good enough for us at this point. If the market is growing at, single digits, certainly we believe we should be growing at double digits. But it doesn't happen month on month, but it happens over the years. So, if you see our market share development over the last 10 years, you've seen a 10% improvement in the light and medium duty from 20 to 30% plus. So we're really looking at it in a much more long-term play. I mean, what happens on a quarter-to-quarter basis is difficult to predict. It's difficult to say, where competition, puts a lot of pressure, where we react.
So let me rephrase my question. Let me rephrase my question. I believe sometime earlier the year, you had indicated that you would probably do a 30% sales growth for the year, if I'm not wrong. Now, is that a fair assessment? You think you'll be able to do a 30% top-line growth, price plus volume combination for the year as a whole, maybe not just the next couple of quarters?
I don't believe I've talked about, let's say forward projections of 30% growth. I've always maintained that, whatever the industry growth is, we plan to beat that. But we're not giving any forward looking numbers on commercial vehicles. So sorry about that.
Okay, fair call. The other thing is, what do you think happens to the margins? Let's assume the industry grows in lower single digits and you probably clock in a 10% volume growth. What happens to the margins? And thereby, I'm constantly coming to how would the bottom line look like? Do you think margins would remain under pressure?
Look, okay, from an Eicher Motors perspective, which we're discussing, of course, we have to break down CV separately and motorcycles separately. So if we take commercial vehicles, we've already seen in the previous quarter ending, ending June end, that that our CV sales were, not growing as fast as they had been earlier. So there's been a single-digit or low double-digit growth in some sense, and what's happening is that. And just to give you context, in VCV, our joint venture, we have a huge agenda for the next 2-3 year horizon, which means products, which means aftermarket, which means quality. So all that spend is going on. The new people which are coming in, we're employing, a lot of new people. We have a lot of spends right now. So all of that is happening. We're not stopping one spend from a futuristic perspective, right? So clearly, when the slowdown or when the growth is slower, as it has been, our margins have taken a bit of a hit, but it's not been that bad. So in the sense that what was earlier around 10% operating margin in our commercial or in our joint venture, if you look at our numbers, it's down to around 7%, which I think are still reasonable for the position we're in. So we're not at all overly worried about the margin pressure, and that's 7% right now, which we clocked in last quarter, is reasonable in our opinion, based on where the industry is right now.
How are you accounting for costs, especially when it comes to the prices of aluminium and rubber?
Well, as a bucket of goods, let's say commodities that we're buying, we've seen a pretty flat year so far in 2012. So we've not seen the huge increases that we saw last year in commodity prices. So there hasn't been any major, I'm saying, upward pressure on as a basket of goods. Of course, there'll be one commodity which spikes up a bit, but there's another commodity which comes down. So there's been no overriding pressure on commodity prices, which has had to result in, let's say, further issues in the market in terms of our margins. So that's not a big concern as of right now.
No, but ease in the prices of aluminium and rubber, as we are given to understand, is that something that's also comforting margins?
Well, nothing is, like I said, from a basket perspective, there's nothing which is violently shifted our basket. So there are some commodities which are going up. Maybe there is some softening in rubber, aluminium, but it's not an enormous effect right now. And especially in commercial vehicles, aluminium is not a very big factor. And I think the tire guys are not relenting as yet. So we'll see how that works out.
All right, Siddharth. I wish you all the best for that. Thanks very much for joining us and giving us your perspective on the business of Eicher Motors. The stock will come up on your screens. That's 2095, 1.5% higher in this session so far.
Okay, take a break. Deepak and Prakash on the other side with their stock recommendations, and of course, one stock to buy, this time with Ambarish Balika. That's coming up on the other side as well.